Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on euro currency. So market on a daily chart mostly stands in the same area near the confluence resistance. Upward action that we have discussed in the weekend has happened. So here you can see minor continuation back to this area, which actually keeps the overall bullish context valid. So in the current moment we are not considering taking any short positions, because as on the euro currency, as on the cross-market analysis, if you take a look at the dollar index performance, at the 10-year interest rates, you will see that overall dynamic stands bearish for United States dollar. So for example, if we take a look at the 10-year yield, you can see this flat consolidation has been broken down, so markets once again are inspired with their expectations of Fed cut, and that will be closer, as recent data on Friday was poor, and this soap opera continues. In the weekend, we in details have explained why we think that situation stands actually in opposite direction, and that here is a big misunderstanding of the market, what really is going on. Market just shows emotional reaction on most recent data. It seems that they're not considering this in a whole context, all pictured together. So, but currently we have what we have. So based on recent bearish sentiment, market is going lower. I mean on 10-year yields, so yields are dropping, which actually makes the bearish impact on the United States dollar index as well. So on the dollar index in general, you could see the same picture but in opposite direction. So here's we have actually the flag consolidation, the bearish trend, and potentially this flag is bearish. What we intend to do today and in the nearest few sessions, we intend to trade this engulfing pattern that has been formed inside of this flag consolidation. On the euro currency, it looks a bit, well, not as bright as here, but overall idea will be the same. So here, once the pattern has been formed, it doesn't contradict the bearish context, which means that here we could try to get some minor rally to sell. So minor retracement usually happens when the market forms the engulfing pattern, and then theoretically some attempt of the downside challenge, downside breakout should come. That's what we have on the euro currency and actually on the dollar index as well. So following this logic, here's also we have this pattern, guys. So on the 4-time frame chart, this pattern stands as a part of this big head and shoulders pattern that we are trading. Our suggestion on Friday was that probably right arm was already stands in place, so currently we could consider some upward extension. And today we will be watching for market flirting around the MACD predictor. So once grabber will be formed on the 4-time frame chart, it might be used as an additional pattern to just as a background for possible taking the long position here as possible upward continuation. The same pattern you have, potential pattern you have on the dollar index. Also, guys, pay attention, it's a very interesting thing. If you will take a look at the retail broker chart of the dollar index, in my situation, this FXCM, so if you take a look at it, you will see on the 4-time frame chart that market stands above the MACD. And it seems that, well, grabber might be formed if market will just drop here below this area. But if you will take a look at the Chicago Mercantile, on ICE futures, on the dollar index on the 4-time frame chart, you will see what actually the market actually stands in a correct place when the grabber actually stands already in place, and market just needs to close below this area. Here's how vitally important to get the really good data and correct data to make the decision, because you could make absolutely different decisions on these two charts, although these charts are actually the same. I mean, for the same asset, and that makes correspondingly strong impact on your trading plan on the euro currency as well. So what I would like to say actually in relation to this grabber is that actually you could watch not only for euro currency performance, whether the grabber will be formed or not. But you also could keep an eye on the dollar index. If you will get the grabber on the dollar index, this is the same. So theoretically, you also could use it to consider taking the position. Now on the hourly chart, our yesterday trading plan has worked. Indeed, market has shown the 30% retracement before our prediction has continued, but that was just within an hour approximately. So maybe not everybody has been able to catch this entry. Now with the retracement down, market showing also another opportunity to consider taking a long position. Here's two levels. Most probable that will be somewhere in the nearest standing level around 108.40. So I think that we could keep an eye on this level and also keep an eye on pairing of the grabber when these two parts will be come together. So it will be a nice background for making decision on the long entry. For the targets, it seems that market has to first reach the neckline, but in perspective, we're of course counting on more. So we expect that market should start moving with this head and shoulders pattern, and at least some upward continuation should follow. That in 2 words that we intend to watch for. So let's see what will happen.